Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's take a look again on the gold market. So obviously this week has passed on the sign of the Fed Reserve. So it's meeting, 25 basis point cut, new comments and so on. But actually, there are lots of other stuff had happened. It's not actually was highly announced in the big media. And we have taken a look in the report as usual on this subject. So first of all, there's a lot of questions to liquidity issues in the United States. Yesterday we talked about the sell-off on the foreign holders of the United States Treasuries, and actually this sell-off is not due to the rising of the price. So some investors think that it might be the reasons. It's because price has raised and actually it makes sense to sell. No, it's a problem with the liquidity and the tariffs. And today we've got the confirm on this as well. It's important because liquidity in the United States has reached a level very close to, well, some white level. So second, we have provided some opinions of the big banks, Bank of America in particular, in this report, where you could see absolutely the same issues that we talked about yesterday and last week. They mostly speak and talk about the same. And as a result, in the end of the report, we have come to a very interesting conclusion that actually we see some factors that might be providing an unexpected risk for the gold performance. Of course, impact of these factors will be short-lived. It will be mostly technical issues, but the collapse on the gold might be significant. We just need to control these moments and be ready for that they actually could happen. Besides, obviously, gold market right now stands in an area where actually, honestly speaking, it deserved to show the pullback. It's a bit overhyped, overextended, overbought on the weekly chart. Stands very close to the important big targets, such as you can see on this chart, 37, 35. We also have another one on monthly chart. It's around 37.43. So big targets and technical background indirectly also suggests some breathtaking, some relief. So taking it all together, we do not exclude that retracement on the gold market could happen. At the same time, currently we do not see any big hazard to the major upside tendency. The factors that stand on the back of this tendency are really strong and long-term, and they actually only start working, such as the policies from, for example, on the central banks. They are changing very slow, but if you start changing, they are changing and lasting for a really considerable period of time. So what we're going to do in the current circumstances? First of all, we need to finish with the target that we have, right? So 37, 35 that we have here on this chart. It seems that we were correct on the possible free drive, right? So based on the performance that we see on Friday, it was correct decision from us. So on the first chart, you could see what has happened. Precisely from the point that we said, take a look, market keeps this channel, performance not actually fits to idea of the hand and shoulders, blah, blah, blah. Everything that we said on Thursday and on Friday when I brought big explanation why I think that here might be upward action with the free drive. And indeed here we've got an acceleration on Friday. Also we've got good entry point with the alongside with the grabber has been formed here on our hourly chart, and simultaneously it has become the reversal bar. I'm not sure that you cut this entry, but don't upset with that. It's still, as you can see, long way to the target. So since everything's going with our idea for now, let's just keep going with it as well. So all we need to do is just keep an eye on the possible pullbacks here, catching for retracement levels, and consider chances for taking a long position. For example, on the hourly chart, if you take a look, here's market is coming to the target. On the hourly chart, if you plot different ABCDs, here's for instance this ABCD, A, B, C bottom, or from this point A, B, C bottom, you got the XOPs, that's extension targets, that stands around the 36.90, 36.97. It's very close to the current market. So once market will reach it, maybe some pullbacks will happen. Here as I plot the major levels, 36.60, 36.50, but here makes sense also maybe a slightly higher standing level as well. So it's somewhere around 36.75. It's another level maybe. 36.60, by the way, will be the confidence support. Because if you plant here the fib levels from these lows to the top, you will see that this will be a confluence. So that actually what we could do in the current situation. So let's keep watching, monitoring the performance of the market on Monday. And once market will start retracement, I hope that it will. Watch for predefined levels, and we will make the decision for a possible position taking, because currently things that I see looks really nice. So here's great acceleration, reversal. Market even hasn't formed the hand shorts that I suggested. So if you remember on Friday we said take a look, maybe we'll get something like hand shorts or something, but here we haven't got it and the market just keep going higher. That's a good sign. That's probably all for now. Let's keep watching, and hopefully in this week we will get the performance right to the target, and then it will be the most interesting thing, how market will react on this big target that we have on the weekly chart and on daily as well.